Good morning, everyone. You are watching live daily market outlook for Tuesday, 22nd of May 2012, prepared by Windsor Brokers. The positive sentiment established in past 2 days, actually from last Friday and yesterday, persists in the market. Basically, not much action seen during the overnight session. However, there's still a positive tone. Keeps hopes of further recovery, especially talking about single currency and the sterling, while also the crude oil regained some ground with the eyes now turned towards the Eurozone summit later this week. That actually boosts most of the instruments. From the other side, gold seems to be losing ground after gains stalled at 1600, our critical barrier that we needed to see cleared in order to resume the short-term recovery, with the price of yellow metal currently hovering around the 1590 zone, keeping still the upside 1600 and the 16 levels Fibonacci resistance intact for now. As said, the crude oil regained some ground, bouncing off recent low at 91.18 posted actually yesterday, with the levels at above 93 seen so far. Euro, as mentioned at the beginning, bounce of last Friday's low at 126.41 still keeps the positive tone, with the late yesterday's action higher and break above again, regain of 28, and the break above yesterday's high at 128.11, keeping hopes of further recovery. More of this we will be we'll see in our technical part. As said during the overnight session, most of the markets extended gains as investors are hunting for bargains as hopes grew that Europe could agree on fresh action to tackle its debt crisis while promoting growth. From the other side of the ocean, President Obama urged Europe yesterday to strengthen its defenses against financial market turmoil and recapitalize its banks as part of a four-pronged strategy for tackling the Eurozone crisis. The European leaders have shown an increased resolve to address these issues, and there is a consensus across the board from France, Germany, and the other European countries. The President Obama said in remarks that suggest Europe is considering broadening its approach to resolving the Eurozone sovereign debt crisis. As he said, I do sense a greater urgency now than perhaps existed 2 years ago or 2.5 years ago, Obama said at the news conference to wrap up 4 days NATO meeting in Chicago, with the world leaders now are growing increasingly alarmed that the budget austerity approach favored by Germany threatens to drive Greece from the Eurozone and deepen Spain's bank problem, which could trigger a global financial crisis and tip the world back into recession. For Obama, that could cost him re-election in November. The Obama, who was joined by British and French officials over the weekend in calling from bolder action ahead of a crucial meeting of European Union leaders tomorrow. First called to discuss studying a growth plank to their fiscal strategy. Obama's remarks point to a four-pronged approach that would encompass financial, economic, fiscal, and monetary measures to address the Eurozone crisis that he said were embraced by leaders who attended the G8 summit in Maryland and the NATO sessions in his hometown of Chicago. Now we'll be watching the market and see whether this still, as I said yesterday, also still rhetoric measures will give some results, as definitely the Eurozone as well as United States are on red alert regarding the current crisis that shows so far no any signal of improvements, and of course possibly catastrophic scenario would be the last thing they wish to happen, but as the recent elections in Greece showed that the winners of the elections are strongly opposing the austerity plan, and this could risk Greece leaving the European Union and possibly even splitting the Eurozone bloc, with the, of course, domino effect of the crisis spreading towards another debt crisis, other countries hit by debt crisis, with the first to come Spain, Portugal, probably Italy, and risking consequences that could not be handled in a proper way, and that could risk even further consequences that, as I said earlier, might risk even splitting the Eurozone. So we will see what will be the action of the EU leaders and the world leaders, I would say, as the tomorrow's EU summit is focus for all investors, and everyone is looking for what will be the outcome of this, what decisions that might give some more light and more prospect into current market situation, as euro dipped to its nearly 5 months low in past couple of weeks, steady decline caused by a debt crisis and the recent situation in Greece. From today's calendar, we're going to take a brief look. We have a number of events that are due, mainly from UK and the US, as this starts with UK's data due at 8:30 GMT. Monthly inflation for April is forecasted at 0.6 compared to 0.3% in March, while yearly release is forecasted below the previous one at 3.10% compared to 3.5% of the month of March. UK's core CPI on yearly basis for April is forecasted at 2% compared to 2.5% in March. Retail price index for April monthly release is forecasted at 0.7% versus 0.4% of of month of March, while the yearly release is forecasted at 3.5% compared to 3.6 in March. Home price index for April 0.5%, slight increase from the previous 0.3%. Public sector net borrowing for April is forecasted to decrease sharply from March's release that shows 15.9 billion pounds sterling, with the current situation in the UK in past months, and the release of number of negative indicators showing a country probably entering a recession. The public sector net borrowing dropped, forecast for today's minus 5.4 billion pounds sterling. From Eurozone at 1400 GMT consumer confidence for May forecast is unchanged to the previous month, minus 20. From US, that starts at the same time, 1400 GMT. Existing home sales for April are expected to increase to 4.64 million units compared to 4.48 million units in March. In a percentage way, great increase by 3.1% is seen in April compared to a negative one of minus 2.6% in month of March. US Richmond Manufacturing Index for May, due at the same time, is forecasted at 12, a slight decrease from the 14 of the month of April, and late in the day, according to GMT time at 23:50, Japan trade balance approximately no big change, 6 negative trade balance of 600 billion yen is expected compared to negative one at 621.3 billion yen in the month of March, and that was from today's indicators. Now we're going to take a look in the markets and see the latest movements and forecasts for the coming 24 hours. As said, euro is still maintaining positive near-term tone of last Friday's low at 126.41, with a higher low left yesterday at 127.24 when the dip found support slightly below our initial supports at 127.57, 127.50, and 127.30. However, the important was that 127 is quite significant support stayed intact, and the fresh rally briefly broke above yesterday's high at 128.11, hitting 128.23 so far. Overnight's easing found ground so far at 127.80 zone, just above the trend line support that currently stands at 127.75. With still a positive tone seen on the hourly chart, keeping the focus higher. We need to see the break above 128.23 minimum, today's high, and a more significant 55 days moving average that is approximately at these levels in order to extend the recovery, as important bear trend line of peak at 132.82 of 1st of May through 131.77 4th of May. Peak has now been broken, and holding above this level, and the break above yesterday's high and the 55 days exponential moving average to open way for a stronger recovery. And still not much to expect from the current action, as the larger picture's outlook still remains fairly bearish, and this is seen just as a corrective action before a fresh weakness, as 126.22 yearly low of euro dollar posted on 13th of January 2012 is still our main target on the downside, unless 129.50 zone is regained, and more significant 130 level, the previous range floor. I would say that current action is just seen corrective. Break above 130 would give more strength to the pair, as it will return to the previous multi-month range and turn focus higher. For now, as long as 129.50 zone holds the upside, the immediate focus remains at the downside, and basically downside remains vulnerable of further losses. 126.41 the low of last Friday, and 126.22 remain our short-term targets for now. The cable entered the narrow range sideways movement on the bounce of Friday's fresh low at 157.31, with the downside being limited at 157.80 and the upside at 158.40, with fresh action seen in the European opening of European session, attempting through the range peak with 158.47 seen so far. That might open way for some stronger recovery. It's 20 days exponential moving average on 4-hour chart that limits the upside for now. I had the first Fibonacci at 158.65. Basically break above 159 as a figure resistance, and more significant 159.50 zone, where it's a 38.2% retracement of 163 to 157.31 descend, along with the descending 55 days exponential moving average, would fuel further recovery of the pair. For now, not much prospect seen for the stronger correction, as long as 159.50 keeps the upside protected. The 4-hour studies are still in the negative territory, but pointing higher. That might see some prospect of further further raise, while hourly studies, I would say, are waking up now from their flat movements, and basically a sustained break above 158.40.65 would show the positive tone in the near-term indicators, and that will give a high probability of stronger corrective action of the recent fall that from 163.00 peak of 30th of April that bottomed so far at 157.31. Today's close above 200 days moving average that was briefly broken last week, currently standing at 158.17. It would give us signal of a possible fresh strength, while failure to do so and any failure under 159.50 would risk a lower top and a fresh weakness, as the quite negative tone that still persists on the larger time frames, such as daily chart, still keeps the more focus towards the downside. A break below 158 to open 157.31 and 157.00, as well as very significant supports below at 156.40 that marks the range bottom of mid-February, as well as 61.8% retracement of the move from yearly low at 152.33 to yearly high at 163.00, as well as 156.00 high low of 12th of March 2012 at 156.00, pardon. The dollar yen remains in the near-term recovery mode of last Friday's low at 79.00 round figure support, and our initial target that was reached, but the price action remains so far limited at initial barrier at 79.45. 79.48 was seen so far. Still no proof of any stronger action higher, as descending 20 days exponential moving average still limits the upside ahead of Fibonacci 23.6 at 79.65 and the 55 days moving average at 79.73. We need to see a break of minimum 80.00 that acts as psychological resistance, as well as 38.2% retracement of down move from 81.77 to 79.00, with more significant static barrier at 80.54, clearance of which is to signal a stronger recovery. Still a negative tone seen in the 4-hour chart, with the hourlies just breaking above their midlines and setting scope for potential break above current consolidation band and open way for a stronger recovery of the recent sharp fall, especially last Thursday when the pair dipped off its highs at 80.40 zone in the sharp decline down to 79.12 and 79.00 at the end. That was the closing of the week level. Daily outlook, however, is still firmly in the negative territory and still keeps the downside favored, as the pair has so far found ground at just below 61.8% Fibonacci retracement of a rally from 76 to 84.17 yearly high, with the break above initial resistance at 79.73. This is the main bear trend line, along with the 4-hour chart 55 days exponential moving average required to slightly improve the outlook, and the 80.00 and the 80.54, the peak of 16th of May, required to confirm and resume a recovery on the upside. On the downside, as said, still negative tone keeps the downside still vulnerable, and the loss of 79.00 to risk test of first dynamic support. 78.52 is 200 days moving average, very important level that was last time broken in March 2012 as a part of the larger downtrend correction of 75.56 all-time low of dollar yen posted on 30th of October 2012, and the 76.00 base of 29th of January 2012. For now, immediate support on the near term is at 79.20 zone. This is the upper range floor. Minor support ahead of a very significant one at 79.00. On the upside, as set 79.65, 79.73, and 80.00 is very significant psychological resistance. The dollar Swiss is still in the corrective mode of its recent peak at 95.00 with 93.66 now holding they seen as the last low as the pair dipped below 23.6 and just holding above 55 days exponential moving average currently at 93.60. Negative tone dominates in the lower time frames. Studies are in the negative territory and see potential of further retracement of the latest rally from 90.41 to 95.00 with the Fibonacci 38.2% at 93.24 seen as the next target ahead of 93.00 as round figure support, and basically a reversal around these levels would be ideal to keep the short-term bulls in play for a fresh extension higher. Loss of 93.00 and 92.70, yes, 50% retracement would sideway the short-term bulls, sideline, pardon, short-term bulls, and turn the immediate focus lower with the 92.16 seen as the next target, 61.8% retracement, and a static support at 92.00 zone. For now, the near-term outlook still as set favors the downside as long as a recent peak at 94.36 posted yesterday stays intact. Loss of 93.66 opens 93.24 and 93.00, and basically loss of 93.00 would be risky for the pair. On the upside, as daily studies are still positive with the current correction seen on overbought conditions, firm break above 95.00 to target 95.45 and a more significant yearly peak at 95.93 posted on 9th of January 2012. A quick look at the commodities, as the crude oil is currently in the near-term corrective mode of yesterday's low at 91.11 with the 93.27, 93.30 zone seen so far. The still positive tone seen on the 1 and the 4-hour chart. Basically, the 4-hour is the MACD is still in the negative territory, but attempting towards the midline, while gain of momentum sees potential of further corrective action as the larger outlook, larger picture outlook remains firmly bearish. This would be just seen as a correction with the previous lows at 92.70 being cleared, and the next static resistance at 95.43 seen as a next target, along with the 96.65 200 days moving average break, of which is required to improve the current negative structure on the downside. Further retracement sees 90.00 as round figure support and 88.54 as 61.8% retracement of the broader rally from 74.94 low of 2nd of October 2011 to 110.53 peak of 2012. And finally, quick look at gold that seems to be losing traction on its recent corrective rally. As we said in our previous sessions, was 1600 was a critical barrier, also marking 50% retracement of the latest down move from 1671 to 1526, as the pair retested the critical support at 1522, 1532, double bottom of September and December 2011. There is attempt to build the base here. However, we need to see the clearance of 1600 as our initial barrier, and 1616 as 61.8% retracement in order to confirm the short-term base and allow for a stronger recovery, and actually to avoid a possible further descent of the gold price, as loss of critical 15.22.32 zone would imply stronger losses of the gold, a stronger correction of its nearly 10 years rally that peaked at 1920 historical high of gold posted last year. As said, break above 1660, 1600, 1616 required to open next. Significant barriers at 1624 comes next, ahead of 1650 zone. On the downside, immediate support is yesterday's low at 1584, ahead of 1582, 23.6% Fibonacci retracement, with another significant levels at 1580 and 1567, and basically loss of 1570, which marks 38.2% retracement, and the 1567 would weaken the structure and sideline the current bulls in favor of a deeper reversal, and that will keep the our main upside target and the break point at 1600 intact for the time being. I would like to thank you all. That was all for today's presentation. We'll be back tomorrow morning at the same time at 7:00 GMT. Until then, I wish you a nice day and very profitable and successful trading. Good luck.